What we say is not investment advice. In each video, we teach you something new and tell you how to invest. Our channel has been open to enable you to take both your education and financial freedom in your hands. Don't forget to subscribe and like the video, and share my videos so that the demand for coins is high so that you can earn well. Enjoy watching. Silver is really incredibly mispriced. I mean, if you look at what happened versus other metals back from 1980, it's the only major metal even if you look at some specialty metals and in right across the board that is below its 1980 high. Gold base metals, platinum group metals, some of the rare earth metals, they're all way above their 1980 high. Silver is the only one that's in fact less than half of its 1980 high. That's one measure. If you look at inflation-adjusted prices, still silver is something like 90%. It's below its 1980 high. It's just a very, very bullish setup. And then we can get into things like industrial and investment demand. But still there really is very much unlike any other metal. If you look at the fact that it's both monetary and industrial, it's about 5,050. And I think both of these sides of silver demand are going to explode in the next few years. So, there are just so many huge drivers for silver going forward. It's about 55% of the silver demand is industrial, and so the balance 45 is what I consider some sort of investment. So it's things like actual investment, people buying physical silver to hold things like jewelry, silverware. And so if you add those together, in my view, as I say, they're kind of some form of investment. So it's about 5,050 roughly overall industrial and investment demand, and so half of the silver supply every year is consumed. If you consider that half of it goes to industrial, it's true that there's about 1 billion ounces of supply every year just roughly of silver supply, and about 15 to 20% of that comes from recycling. So naturally some of the industrial demand or use does come back into the supply. But a really interesting note about silver is that only about 28% of silver supply comes from what? Called primary silver mines. The rest comes from mining other metals, comes from mining gold, copper, lead, and zinc. And so silver is highly dependent on the production of those other metals. And if you get perhaps some kind of a slowdown or not silver, a lot of, as I say, about more than 2/3 of silver supply depends on those other metals. So if the price of silver goes up, demand for silver goes up unless the production of those other metals. This goes up at the same time, you're not going to get more supply. You're or at least limited, since as I say about 28% comes from primary silver mines. And besides that, I mean, silver is also the most conductive metal. That means that it conducts electricity better than any other metal. It's actually that's measured on a scale up to 100, and silver is the standard. Silver is the 100. Copper is, I think, a little bit below at 95 or 97. Gold is, I think, a little bit below that. And it's also the most reflective. It reflects 95% of light. It's the single most reflective substance. Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now let's continue. And if you look at what's happening on the demand side, I think really you can't deny that solar over the next years and decades is going to be a huge driver for silver. The fact that it's highly reflective and conductive has a lot to do with silver being used in solar panels. But right now of overall demand, silver is 12%. And if you look at overall industrial demand, it's more than 20% of all industrial demand goes only to the solar. And so this big green energy shift, I think, is going to probably at the very least double silver demand over the next 8 to 10 years. And you've got all sorts of other, projections. The International Energy Agency saying that output from solar is going to be something like nearly 9 times what it is today just in the next 8 years. And then you've got the Inflation Reduction Act in the US that is very, very bullish for silver. Something like $320 billion over the next 10 years is going to go towards solar. And then you have technologies in solar panels where the next technology is supposed to require about 50% more silver, and the technology to follow on that something like 150% more silver per panel. So, it's really a very, very bullish outlook. So actually that's, I think, a very, very important concept for viewers, as you say. I talk about that in the book, and that's certainly one good reason to pick up the book and understand really what's going on. And that is that it's a simple concept, but important one. It's where central banks and central planners intentionally keep interest rates relatively low while inflation runs higher than interest rates. I have a chart in the book that shows that 5,000 years of interest rates, and when we had rates near zero, and this only goes back past decade or so, and for an extended multiple years of rates near 0. Those were the lowest rates in 100 years of history. And so really we are in uncharted waters. It's true that rates are rising right now, but if you look at, for example, in the US rates somewhere around 3% that the Fed is setting versus the inflation rate closer to 8%, and those are just official rates. If you go to non-official rates, or probably more than double that, closer to 1,617%, it's easy to see that rates are very, very much below the inflation rate, and that's not by accident. By having central planners keep interest rates well below inflation rates, there's a huge loss to purchasing power. But at the same time, it helps governments with huge debts to be able to repay those debts over time with the depreciated dollars. So it makes the debt manageable in that sense. So that's what I call financial depression. And silver has been a great hedge against financial repression and against inflation over millennia. It was the first truly international currency. It's always been an inflation hedge since then. And if you look back, I did the math. I went back and looked at, the last 100 years. For example, 1922, silver sold for 60 cents an ounce, and if you use the official rate of inflation, just over 3%, let's say. Average annually per year since then, silver should be at about $11 an ounce. And today we're at just under 20. So silver has more than doubled official inflation rates and probably is a lot closer to a fair return on what is real inflation. So over time it certainly really does retain its value.